Okay, good afternoon, everybody. This is Dennis with the Active Trend Traders. If you are making any comments to me, yes, I do have a cold. Thank you. I am on the mainland. I am in Arkansas, Paragould, Arkansas, taking care of my mom, who just got out of physical rehab after a stroke. But we're still keeping our eyeball on what's going on with the market. Had some good returns earlier in the week, but I want to cover one trade that I'm looking at going into next week or into the next couple of weeks, and that trade is a earnings trade on YY. What's YY telling us? Okay, one is if I take a look here at the TSI, it has in fact ticked up, and it's ticking up again today, and it is crossing above the 820 combo. We'll hone in on that. It gets above the 820 combo, and not on a whole lot of huge volume, but it tends to do some nice running into earnings. Earnings right now is set for, and you need to verify this, but earnings is set for, right now it's showing up on 11:14 after the market closes. And so what would trigger me into a trade like this? I don't necessarily want to jump in this trade right now, simply because it is back up against a resistance level that it may or may not break through. So I have a couple of places where I would be interested in jumping onto YY. That would be down here against this trend line, or if I drop below the 820, I would have no problem buying some shares, bouncing back up through it. Where would be my stop loss? My stop loss, if I took a full, well, let's take a look over here. Of course, I need to, there we go. I'm operating on one screen, and so that's one of the reasons why I have to bounce around a lot. But let's jump over here to taskbar. Let's look over here to the trade I'm looking at setting up. Well, the trade I'm looking at setting up is this one here, and it's basically to buy 220 shares. I need to get I got to check one other thing. There we go. Okay. The pre-earning trades that I'm looking at this is basically a little cheat sheet, not cheat sheet, but table that I have on. For looking at this, I'm looking at YY. I can invest up to full position would be $20,000. So that means I can buy. Hold on. Where if it pulls back and rebounds up through the 820 combo, that would put me in at about $89.60. I can afford to get and stay within the rules of the active trend trading, 227 shares. I would basically round down to 220 shares. My 5% stop loss would be down here at 85.12. My profit target, again, prior to earnings, if I pick up 5%, 5 to 10% is typically what I look for a pre-earnings run. Sometimes they work out very nice, and sometimes, hey, they don't. But I can do this a couple of ways. This is buying the stock, so I can go ahead and jump in at 860, around 860. Here's my targets. I can adjust my stop loss, up according to to that little trend line we were looking at. Let's go back over here. So to do this order, what I would be doing is so with that said, let me go back to okay, here we go. So I want to set this up for YY, for it to pull back into the middle of today's candlestick. And so here's a trade that I'm setting up, 220 shares of YY, a limit price of $89.60. Well, what else am I doing? Well, I want this order to trigger only if YY drops to the midsection of that candle or slightly below the existing 820 combo, $89.50. Now I'm going to put that out there as an order, good till canceled, but I will be checking that again on Monday if I'm not filled today, and I may be adjusting that. So again, this is keeping with our wanting to provide a one trade per month approximately and these pre-earning trades can work out very good. And again, we will keep our stops tight, at no more than 5%, just in case we're wrong. And again, we have the trigger, so I can basically just go ahead and save this, and I can go ahead and confirm and send. But before I confirm and send, what I will be doing is I want to, of course, I want to send an alert to the Premium Active Trend Trader, Active Trend Trading members, which I think is here. And I will have a new message. Active Trend Trading Alerts. This is a regular alert. Strategy 1. If order, oh come on, here we go. Okay, order to buy YY at $89.60 limit. If price, and that would be a stop limit. Because I want to buy it on the rebound. If price goes below $89.50. More details with email alert, which I'll send out if we're in fact filled. And as you notice, I expect everybody to do their own sizing for their positions, and so I know how many shares I'll be buying based on the capital that we're utilizing and how much of a fifth of the capital we allocate for strategy 1. This is a pre-earnings trade. Pre-earnings trade. Close before earnings on AMC 11/14. Okay. And I've got too many characters. Why do I have too many characters? Earn trade close before pre-earnings. There we go. Okay, and then I'll go out to the premium members, and away it goes. Send the message. And so, yeah, I could be doing Strat 1 and Strat 2 on. I have got no problem with that, Eric. Doing the options will sometimes, the option trades are kind of a backup, if you will, but they're two legitimate trades. Now, the option trade, only for the premium members that I put out during market, during just a few minutes ago. So I'm looking at a move on this. So, okay, I can get rid of that. That has gone. And so let's get it in and look at the rest of what's going on. Excuse me just a second, I need to sneeze. Okay, we're back. Let's get into today's presentation. One is, remember that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. There's a little bit about me and what I'm doing currently. Be glad I'll be back in Hawaii back on Tuesday evening of next week. We're keeping an eye on the seasonality on some of the entities in the an eye on seasonality on some of the market indexes, and also on gold. We'll be taking a look at that shortly. So the objective of today's review is just basically timely, actionable intel review at the end of each week. Market review, stocks, ETFs setting up, and the outcomes from earlier in the week. We basically are in a position where we are in a one of our bonus trades that we'll talk about here shortly. As I said, for the people turning in just the Mondays and Fridays, how to make money trading stocks and aftermarket Mondays, I want to make a commitment to you guys to provide like one trade per month or somewhere between 10 to 12 trades per year. Give you an idea of how the active trend trading system works. So here's where we're sitting as of close of business, or about 9 o'clock this morning. And we closed out one of our positions on an NVDA, our strategy 3 position. And we basically are sitting at about 43%. Our target for the year is 40%. So I think this year, I have adjusted, and I'm going for somewhere between 50 to 55, or even up to 60% for the year. So let's take a look at some of the charts to see what we are. And again, I apologize for my sniffles today. Okay, SPX, as you can see, SPX on a weekly chart, it is still powering higher. However, I'm going to let's get that over here. Part of what you can't see on your screen is a lot of the, which normally comes up on my other screen when I have operating from 2 screens is, there we go. Okay, as we can is basically some of the comments and all that kind of stuff. It's all on one screen, but you can't see it from your side, and it's normally on my other screen. So let's take a look at SPX. SPX, basically, TSI, yeah, it's rounding back up, not even getting close to the 0 line, and it's pushing higher. We are pushing into, for the market forecast, we've got a two-line cluster right now. If the secondary momentum line gets up towards the top, while the other one's still up there, we will have a 3-line cluster. Well, what does a 3-line cluster mean for us? Normally, within 1 to 5 days, you'll get some kind of a pullback. But as you note, the pullbacks that we've had recently in the S&P have been very, very, very short and shallow, back to a moving average like the 8 or the 20, and then rebound. It's been, challenged to kind of trade against, trade these, just real quick moves up to the upside. So one of the things we can do is we can actually, lay in a trend line from, about here. Well, not about here, but from here. There we go. Up through this point here. And as long as that trend line right there remains in intact, the trend's going to continue. Will it continue on? Will it continue on through the winter or the Christmas boost that we normally get? We'll see. Right now, the essence is, trade the pullbacks, and that's basically all we can do until they stop working. Now, the true strength on the weekly chart, yeah, it's looking like it is definitely overbought. However, it has not tipped over yet. And remember, once it gets overbought, it can still continue to push higher a little bit. And we have no reversal candle yet. Last week we had a hanging man for a weekly chart, candlestick. However, it's been voided now, so that negative or bearish reversal hanging man is now a void signal. So we are continuing to push higher. Okay, what about the NDX? Again, NDX got a quick pull back down to the 8-day on the daily chart yesterday, and then it's rebounding. TSI has bounced back up and is pointing stored up, so it's up. TSI is up in the area where it tends to reverse, but again, we're just getting these very short and shallow reversals. This gap up on Friday of last week was really challenging to trade, and as you can tell, the market is still very pleased and happy with what's going on in the economy, and the promise or the potential promise of a tax break that's being worked on, that could also work out as a benefit for the market if we can get some surety, where the market likes the ability to say, hey, this is what's going to happen, and away we go. Let's see what somebody say here. Poor Mike. He thought we were going in the tank. Yeah, I mean, that's where we can have our bias on what we think the market's going to do, but the real essence of it is just we got to trade the chart. Now, the Russell, I'm a little bit more positive on the Russell for a potential rebound going into the end of the year, just simply because it's not acting as strong as the other indices. Now, that could be totally, that is right now based on what the pattern's doing, which is basically just curling up and like the spring, it's coiling up here about the just above the 1488 level. Is it going to spring to the upside and move hard? The weekly chart is telling us that, yeah, maybe not. I mean, the weekly chart's saying I may be crossing over here. If I break through this support level at the 1480 level, then I'm probably going to down here and test the 1450 or even down here to the 1425 level. I showed this to the folks in the on Wednesday night. We can basically take a recent move down to the downside, which was, let's say, here, and we can take that, activate it, move it over. If we get a similar type move down, which is not unreasonable now that we it appears as if we're getting across, well, it's going to be down at the lower level somewhere around 1127. 1127. Hold on just a second, please. Okay, it'll be down to the bottom about 1127 approximately, and then we can anticipate a bounce from there. Now that would put us in pretty good position for an end of year bounce on the Russell. But it could also turn earlier than that. We could come down here to the 0 line and bounce, or the 20 line and bounce. It's just, but it's just something to keep in mind of projecting out a time frame for a potential market reversal for the Russell. right now we have not got a commitment to the downside for a real strong pullback. And so I'm just, when I do my analysis, I'm sitting there looking, okay, this is what it could do, but then it could be shorter than that. It may just find it works off its overbought condition and stays right there at the 1484, 1480 level and rebounds at the end of the year after that. We shall see. So that's what we're looking at on the indexes. So as long as we're here, let's take a real quick look at a couple of other things that we're looking at. NVDA, it also has earnings coming up on the 11/9 after market close. So I'll be looking at keeping an eye on that for a earnings trade. GDX. Is GDX going to find support here and do a rebound, because gold tends to do a little seasonal bounce around this time frame, and of course I would tie that into Nugget. And I'm liking keeping some exposure to Netflix when we get a proper setup. Right now we don't have anything. Grub is another one that's looking, it's just a beast right now. It broke out with earnings. Well, it broke out above this 58 level. So typically 70% of stocks will make an attempt to come back to the support level of the breakout. Sometimes they fall short of it and then rebound from there, but that's what we're waiting on right now, to some kind of a little pullback into the breakout on Grub. Grub looks pretty good. Kiwi is another one as pre-market or pre-earnings run. It looks kind of interesting, and you can buy the 17. Okay, it has earnings, and I'll just throw this out right now. It has earnings coming out on, earnings coming out on 11/16 before the market opens. And so you can go out to the week. It also has weekly options. You can go out to the week that earnings are going to happen, and I think you can pick up the $17 call for about 50 cents. And so it's and over the next 2 weeks, that implied volatility is going to increase. So even if it just, even if Kiwi just kind of churns around that $17 level, the value of that call will continue to move up with the implied volatility. If it breaks out or moves back up, say to 18 or 19, it would be a really, even a better trade, and, probably provide a real quick, 100% return on that. Let's see, why we talked about, I think we've talked about everything. Tesla, I'll just give you a picture of what Tesla's doing. I'm not buying Tesla at this point. Tesla has now broken out of this upside pattern up here, and yes, it has found support. It may get a rebound, but it has a target down about the 270, 260 level. I would like to see. Here's what. Now I'm still going to trade Tesla. But what I'd like to see Tesla do is go up into the moving averages, or back up here to the 13, 17 level, put in some reversal candles, and then drop from there. That would be then take advantage of this drop to the downside, because it is definitely in gear back to the downside. A lot of the reports that are coming out of Tesla are not favorable. Still like it as a company, still like it long term, but right now I'm just not buying Tesla at this point. I want to be, basically I'll be taking advantage of any short opportunities on Tesla. Okay, let's go back to, so that's where we're sitting on there. Let me just, if anybody's made any comments. Okay, excellent, Scott. Scott's going to be selling puts on Netflix because it's working well. Yeah, I like that idea. See if I missed anything from anybody. My gosh darn. I'm using my mobile hotspot, and so I don't quite get the same bandwidth that I do with my other thing. Okay, good. I'm caught up. Okay, let's move on to the rest of tonight. And so seasonality, we were talking about that, and I want to come right down to seasonality. Look here in the October-November timeframe. NASDAQ tends to catch a bid after maybe a little bit of a pullback into early November, and then run hard into the end of the year. That's what we're anticipating. We're just waiting for it to basically give us a nice pullback so we can jump on board. We know that this tends to be its model that's happened. What we found is this year's seasonality charts for the indexes have been a little bit wonky in that they don't look exactly like this, as far as the trajectory. But what we also have noticed is that the identified lows where they tend to catch a bid to move higher, those have worked pretty well within a week to 2 weeks, 3 weeks of identifying where things start moving up. Same thing on the Russell. As you can see, the Russell tends to go, kind of like hibernate a little bit into the November timeframe, and then mid-November, catch that bid and run, up. And if it runs, okay, there's a 4% gain. That'll be about 12% on a leverage ETF. So here's the rest of what we're talking about. Okay, IWM, which one am I going to trade right now? I like IWM and QQQs better than SPY. But as long as the uptrend continues to function, we can look at, selling. You can either sell puts again, you can buy calls, you can buy the leveraged bullish side when it gets pullbacks into the moving averages. Play, we're still in that. It's hanging in. Netflix, Tesla, NVDA, earnings coming up on NVDA, YY, Grub, I like that. And then of course we have our special catfish, special play that is in play. I want to remind everybody that we've been doing some refinements to strategy 2, and I'll be launching those trades this week, moving into for our premium members. Markets usually go up the week of Thanksgiving. That is correct, Michael. Yeah, the week of Thanksgiving. As a matter of fact, there is a bias almost on every holiday. You look at the 3-day weekends and all that kind of stuff, there's a bias for the market to go up. Lastly, if you are in the Bay Area, one of the best IBD traders that I know will be presenting for the Bay Area Moneymakers at the Masonic, and his name is Lee Tanner. Some of you may know Lee. Absolutely awesome. He's going to be dissecting the IBD stocks and then basically identifying how he has done for 2017 and how things are shaping up for 2018. Be an awesome show. If you're not in the Bay Area, you can still view Lee's webinar, because it will, and you just need to go to bayareamoneymakers.com and pay a monthly due, $15, and you get to see 2.5 hours of Lee doing a very deep depth entailed dissection of the IBD. Here's where we're sitting with the so far. Like I said, we closed that NVDA trade and it was then added to the pile, and that's where the strategy 3 just really jumped from the gain on that. So with the active trend trading system, we again follow the 5 pillars of active trend trading. We want to basically show people what to trade, when to enter, when to exit, what strategy we're going to use, and what to expect. So here's a feature that we just implemented within the past past 4 to 5 weeks, and has been working out very well. What it does is sometimes, hey, I'm human. I miss trades occasionally, but I get this out at the beginning of the week of this is what I'm watching. If we have a setup that's based on one of the active trend trading triggers, I will highlight that with a Y, like this, and then on every entity here, and there's only like I think there's 10, 11, 12 entries here. It'll say, okay, here's what I'm waiting on to happen to be able to get into a trade on one of these. So we have our 7 ETFs, 3 of our primary stocks we're looking at, and then F5, Play and Cruise. This will be adjusted, and this was from the 29th. And so I do this every weekend to let you know what's going on. TSI, we made some good trades on Netflix this weekend, or this past week, and they were credit trades. And then, of course, Tesla. Tesla, we made a nice move on Tesla when it dropped from the sky with the strategy 3 trades. Excuse me. Okay, I want to say thank you very much. God bless everybody. Sorry, I left my button on, was muted. So I just want to say thanks a lot. I hope that the couple of trades that we identified for you will be beneficial. I will be updating the YY potential trade on, throughout next week to try to get into the trade prior to earnings. So I hope that helps. Looking forward, if you can make it to the BAM meeting this weekend, that would be awesome. So with that, God bless everybody, and those of you who are premium members will be doing the final hour coming up shortly. Until Monday after the next week. Aloha, trade wisely and profitably. God bless everybody.